If we see a breach of 280 on increased volume, that would probably be a harbinger for higher price action, and that's something that we're watching very closely.
When you take a look at the breakdown, median price target is 210. Tesla's currently trading at 263.
The EV maker, Chinese EV maker, surging today after it launched its new G6 Coupe SUV in China, coming in at just under $29,000. That's below the price for Tesla's Model Y.
We're going to cover all that and more, but first, let's take a look and see how the stock is actually doing. For the day, Tesla's up a little over 1.5%, closing at 261.77. A good spot to be going into that long weekend. Markets will be closed on Monday and Tuesday, giving Tesla an ample amount of time to release their delivery numbers for Q2, which will either send the stock soaring or give investors pause. I guess we'll find out soon enough. For the week, Tesla ended up down almost 0.25%. Looking back at the past 30 days, Tesla is still up 30%. Going back 52 weeks, up just a little over 15%. And year to date, Tesla, one of the most phenomenal stocks of the year so far, at 142%. Truly a remarkable story, but they're not done yet. Some of you might be asking, Hustle, what do I do? Do I buy stocks? Or do I venture off into the deep waters of options trading? Let's see if this video helps.
Trade Tesla with Dan Deming, managing partner of KKM Financial. Dan, thanks so much for joining us. How are you looking at Tesla heading into the second half? I mentioned that the median price target is quite a bit lower than where Tesla's currently trading. Kevin mentioned maybe a lack of conviction in terms of volume. What are your thoughts?
You know, I'm going to kind of parlay what Kevin said. I think there are a couple of things that you need to pay attention to when you look at the price action of Tesla. Overall, though, the general trend still appears to be higher as far as I can see. But he brings up a great point, and that's going to be part of my discussion as well about the trade example today, is that 280 level, resistance level. You know, and we are trying to regain some upside momentum in Tesla, but as he pointed out, on declining volume. So if we see a breach of 280 on increased volume, that would probably be a harbinger for higher price action, and that's something that we're watching very closely.
Okay, so take us through your example trade.
Sure. So I'm looking at, basically trying to play for a range, and also define the risk to the downside in this trade example today, Caroline. So what I'm looking at is an August call condor, as they call it. And that's basically buying one call spread that's in or at the money and then selling another call spread further out of the money to finance the cost of the call spread that you're buying. Gives you a nice range to the upside. I'm looking at the August 260, 290, 320. 350 call condor, where you're buying the 260 and selling the 290, 320 and buying the 350. You can do that for about $8.50 here. It allows you to capture some nice upside, defines your risk to the downside, and again, you can lower the price of exposure by selling that high side call.
Now looking at the screen, this is actually quite complicated. One, you have to have hundreds of shares of Tesla in order to make this trade possible. Utilizing premium, providing insurance for those that may or may not want to enter or exit positions, yada, yada, yada. But what I really find interesting is the expiration date for this transaction. It is August 18th. And if you're familiar with the options market, day trading or even calls or puts that have an expiration date or week, maybe 2 weeks out, they are so expensive. The implied volatility is ridiculous, more so than with any other stock in this market cap. I wouldn't say it's a good or bad trade. I would call it a safe trade. If you have 200 shares of Tesla that you're willing to leverage, this trade right here will only cost you $850. And quite frankly, it's a bullish trade that insists Tesla will rejoin the $1 trillion market cap club by August 18th. Now, if Tesla goes over $320 per share by August 18th, well, there's worse things than having to sell 100 shares of Tesla stock at $320 per share. This is a very bullish trade, quite complex too.
Let's bring in senior markets correspondent Kevin Green. He joins us by phone from Chicago. Kevin, great to have you here with us. We'll, of course, get the delivery numbers over the weekend for Tesla. Shares up about 2.3% ahead of those results. So obviously Wall Street seems pretty optimistic. What are the numbers we can expect?
Yeah, we are expecting those numbers to come out potentially on Sunday here on the 2nd. So we are actually expecting, and the market is expecting, around 445,000 vehicles to be delivered from April to June of this year. Now, this is also going to include, and we will see the impacts of the discounts that they have started to offer, as well as other incentives, other tax credits. So we are going to see if it's had a meaningful impact on not only production numbers, but delivery numbers. And if we could try to ascertain how the environment is in China as well. Now, when we get these numbers, we typically do not get a lot of commentary along with these numbers, so we kind of have to speculate where the growth is at when it comes to the actual deliveries. But this increase of 445,000 vehicles would be about a 5% increase from the previous quarter. So still showing some growth there, but highly anticipated number. As you said, we are seeing a move to the upside in the stock today. If we do see the company beat the street's expectations, that could be a further catalyst to the upside.
Newsflash, Tesla will beat these numbers. I'm sitting somewhere a little over 450,000. And while many people expect the margin numbers to be shallow, I'm of the camp that Tesla is going to pull a rabbit out of their hat and surprise not only investors, but these analysts as well.
Obviously, those discounts come at a cost, and I'm referring to margins, and I know that that's a key metric that a lot of investors and analysts will be watching for Tesla. Do we expect to get any margin guidance, or you said a kind of a lack of commentary? We'll have to wait until they actually report results to get an idea of what the impact of those discounts are on the margins for Tesla.
Yeah, we will have to wait till the earnings announcement itself to be able to see what the impact is for margins. But you can definitely expect a lot of analysts are going to be able to try to back into that number. Obviously, we saw a sub 20% number when it came to the car sales, and that was a little bit of a concern for a lot of analysts out there. We did see the stock move to the downside because of that. But once again, if they are able to compensate that lower margin rate with greater deliveries, then obviously that could be a win for the company. So right now, I think what we are going to be expecting is just the raw data coming from Tesla. We'll have the analysts after kind of infer what the impact is going to be on the bottom line for the company, and then we will also have a confirmation of their earnings results as well as far as the date and time with this vehicle release as well. So that's going to be the information that we will see this weekend, and then obviously we'll probably see a lot of commentary coming in Monday or Wednesday, because Tuesday is a holiday.
What do you think, Kevin? Analysts are getting a lot more split on Tesla when you take a look at the breakdown. Median price target is 210. Tesla's currently trading at 263. So obviously, analysts need to do some catching up, or maybe Tesla has seen its run higher with this 114% year-to-date increase. But I know you went from kind of cautious to a little bit more optimistic. Do you think that we will continue to see this broadening out of the rally, or do you think Tesla will continue to lead this market higher?
Before I let our analyst answer this question, Wall Street is absolutely split on how to value Tesla. Many analysts feel that Tesla, just a car company, is way overvalued, while other analysts on the other side of the spectrum feel you're not dealing with just a car company. Tesla is the leader in the battery electric vehicle space. However, they're gaining ground when you're talking about their energy department. They're working on software that can transform the way we get around. Full self-driving beta will be the single most driver of Tesla's evaluation, on top of what they're doing as an automobile company, as an energy company, and let's not even go to the robotics section. Forgetting all the numbers that are going to come out in the Q2 earnings, never lose sight of where this company is going to be headed 5 or 10 years down the road. Solving for autonomy is just a stepping stone to more and more revenue.
At the end of the day, a lot of traders and investors are looking for companies with strong balance sheets, and the market cap to come with it, and that's where a lot of these inflows are coming in at. And also we have to just keep in mind too, the passive investor, those that are going in and depositing money and buying ETFs like the SPY and some other ones as well, that's going to impact those that are heavily weighted in the index like Tesla, Nvidia, Apple, Microsoft as well. So that's also another reason for the catalyst. I would say I'm still cautious of this marketplace. I would like to see the market broaden out here a little bit, having the Russell 2000 participate, seeing the regional banks starting to move back to the upside, as well as some of these other lagging industries like healthcare. If we continue to see that type of participation, I think that would be bullish for the stock. Just one thing to note, if we look at the last 5 sessions, we are seeing for the last 4 sessions, we are seeing a move back to the upside when it comes to Tesla, but it's on declining volume. So that's something just to keep an eye on that does not really show a lot of conviction. Maybe there's a little bit of hesitancy as we get towards that $280-ish level, which has been an area of resistance. So Caroline, we'll probably see what the reaction is going to be for next week. If we get some good numbers, that could be a catalyst to break through that critical resistance point and hold that. But if not, maybe we see some continued volatility in this name.
All right, Kevin, can always count on you to keep the optimism in check a little bit. I appreciate it. Thanks so much, Kevin Green.
Volumes toward the end of the day slowed to a turtle's pace. In regards to Tesla, everybody's in a wait-and-see mode.
EV maker surging today after it launched its new G6 Coupe SUV in China, coming in at just under $29,000. That's below the price for Tesla's Model Y, which is currently around $30,000 in China. And analysts were positive here on the pricing strategy for this new vehicle.
I mean, look, I've never ridden an XPeng. I would love to. I would love to give it a shot. I have no doubt our own Pro Supermanian has taken a ride in all of these before. But, you know, as you think about where this market in China is getting that much more competitive, whether it be on some of the U.S. or European companies that are trying to set up camp to be able to produce and then directly deliver within that region, Tesla has certainly been very vocal and very out front about some of their ambitions there, and especially in this EV landscape too, as you have now a region that is placing more mandates in focus and in operation for some of the traditional combustion engine companies that are in that region, in the Greater China region, XPeng, as well as Tesla and some of the other pure EV plays. It's going to be interesting to see how they can be able to maintain their own market share while there is increasing production mandate from some of the larger entities that have been in the region for decades.
Yeah.
Tesla really doesn't care about XPeng's EV market share. If you make an electric vehicle that is reasonably priced, what you're doing is taking market share away from the internal combustion engine. Tesla is going to continue to sell every one of the vehicles that they make. This is great news for XPeng if they're not losing a bunch of money trying to compete with Tesla's Model Y over there in China. So as long as their margins aren't negative, this is a great move. But make no mistake, Tesla is not concerned. They're going to continue to sell every one of their vehicles they make in Shanghai and sell them to the Chinese consumer or export them somewhere else. World's a pretty big place.
Yeah, I mean, when it just comes purely to the stock, the likes of folks at Citigroup, while they're encouraged by the pricing of this product, they say the valuation is too steep for them right now.
Listen to these experts at your own peril. Valuations are too steep. I wonder if they were saying that about Apple back in 2008, 2012, 2016, 2020. Now, Apple is a $3 trillion company. But go ahead. Listening to the experts can't steer you wrong, right? What do I know? Just some idiot on YouTube. In conclusion, Tesla options are volatile, and Tesla stock is dangerous because the evaluation is too high. Tesla's delivery numbers are highly anticipated, hopefully coming in on July 2nd. We'll get a chance to see how that affects the pre-market before the markets officially open on Wednesday morning. And with the G6, XPeng declares, "We will not go quietly into the night. We're going to live on. We're going to survive. Today, we celebrate our independence." Sorry, XPeng didn't say that, but they are trying to compete with the Model Y in China, and kudos to them. In actuality, XPeng isn't in competition with Tesla. They're in competition with the comparable internal combustion engine vehicles over there. XPeng is taking market share away from internal combustion engines. And that's all I got for you today. Hope everyone has a happy 4th of July weekend. For those of you that aren't in the States, and you're still watching this video, drop your boy a comment with where you're hailing from, and I'll make sure to get back to you. Be easy. Peace.